Well, good evening, fans. Welcome back to the channel. And thank you so much for taking time out of your day to watch these videos. And I always try to provide significant value that makes it worth your time. So today I'm going to go back to the dividend drawing board because that seems to be what does best on my channel. I think the vast majority of my audience actually consists of dividend fans. And it's funny because dividends from time to time can be controversial, I guess, or there's different schools of thought on dividends. And you wouldn't think something like a dividend payment would be controversial. But my stance is that I like dividends, and not every company certainly pays dividends, but it's always nice when they do come in because you don't have to just reinvest them all into the stock or the fund that pays them out. And that's what I'm a big fan of, especially in this environment. I like to take those dividends and use them to buy other funds instead of reinvesting them, especially if the stock is not doing that well. Like one of my favorite examples, I hold AT&T, which I've had for the last 5 years. It's been a very poor performing stock. And you could make the argument that the dividend actually takes away from the actual value of the stock, which it does. I mean, if you study your typical stock valuation models, dividends come out of that. And every time there's an ex dividend date when there's quarterly dividends paid, it comes directly out of the price of the stock. Ideally, when the stock is doing well, when the company's having a great year, those valuations or the stock price comes right back. So then when, say, AT&T pays $1 per quarter, it just dropped because of the recent restructuring. They split out Warner Brothers and all of that. But ideally, if the company like AT&T is performing very well, then that dollar comes right back because the stock goes right back up in value. So it makes it back up. So you can basically double dip with really good, solid companies like Blackstone that I've covered. And I'm going to do another video on that. I had a few comments asking about that. That's probably my all-time favorite stock. I know I've referenced that a bunch, but I'm going to get into over the last 5 years how I was up close to 400% in that stock while it pays a dividend. So I'm going to show you, even with the dividend payments, how well that one did. And that's a prime example of a good, solidly performing company that pays a dividend and still makes it back up in its performance. So with that being said, I've had a lot of comments on my videos I've done on QYLD. Like I said, those seem to get the most views and the most engagement. So a lot of comments have asked me to cover the other funds that kind of go hand in hand with QYLD. I've already done a video on RYLD and XYLD, but today I'm going to cover DIVO or DIVO, JEPI, and XYLG. And as a bonus, I may throw in another one that I just discovered recently towards the end of the video. But I mainly want to cover these because I've gotten a lot of comments asking for my opinion on these. And if somebody was going to retire, you know, how they should position themselves. So I certainly, when I started as a dividend investor, kind of like a lot of other YouTubers that you hear on here, I got to be a big fan of the dividend payouts. And I said, oh, wow, eventually, if I make enough in these, like if I get $1 million and I get like an average dividend rate of return of like 6 or 7%, you know, I could replace my work income with just dividends. Well, that's a lot easier said than done. That takes many years to do. And I look at it, dividends are always nice to have, but they're not your bread and butter of your strategy. They're just one prong of the multi-pronged strategy that you should have as an investor. So with that being said, let's dive into DIVO. So just looking at the performance of this fund, and I haven't studied this one too much, so I'm just going to make some judgment calls here live on this video. So just looking at it, from what I see from Yahoo Finance here, we're going back to December 2016. This one has actually grown, unlike QYLD. This one has appreciated in price over time, going from $25 in December 2016, approximately, to as high as $38 at the end of 2021. And it has dropped to $35 today. not too bad given the performance of the overall market. From what I see, the dividend yield is 4.92%. So again, not bad, not quite QYLD. And that dividend's coming up too. I'll do another monthly dividend video on that coming up probably June 1st when it pays out. I see the dividend's going to be lower, which makes sense because the fund has dropped. I think it's down to like $17. So I'll make a judgment call on whether I should stay in that or not. And I'll, let all of my viewers know, of course. So with this, that's basically the performance of it. Inception date, yeah, December 2016. This is an ETF, so there's no other stuff to look at like a stock. So 5% dividend overall. That doesn't really jump out at me as like a top dividend. I like more juicy ones, like, between 10 and 15%. And another caveat to this that I want to emphasize, you should never look at a dividend payout and solely base your decision to get in the fund on the dividend payout, because it can be very easy if you don't think critically to Google, or you can even go to like the ETF database and you can filter out a top dividend paying ETFs and you can find a top percentage, but you've got to ask yourself why that percentage is so high. If the why passes the test, if it's high and the stock or the ETF is performing well, then you're good. But if not, like in the case of one example I can give, there was a offshore oil drilling company, I think it was called Seadrill. They were paying like 14% in dividends. And the dividend was so high because they didn't cut the dividend yet, but the stock was hemorrhaging value. So the 14% was based on a stock price that had basically been cut in half with the dividend not cut yet. So those are the things you have to look at. And you'll see other videos, on YouTube. I mean, you'll see there's a ton of dividend content, but you'll see some that say, this is why dividends aren't great. But that's why you as an investor have to read between the lines and think critically. And that's what I try to, mentor and coach my audience to do. So with that, now let's look at this JEPI. And if we have time, I don't want to make this too long, but I may do some off the cuff, on the fly math in a spreadsheet. So the JP Morgan Equity Premium Income ETF trading at 56.93, which is kind of high. I mean, you can get into QYLD for like a third of this or almost a fourth. But the yield is attractive, 10.73%. And inception date, this is a fairly new one. This goes back to, actually, it just turned 2 years old on the 20th. And so what you see here, you see some decent price appreciation. This is up over 10% in 2 years, despite paying a lofty dividend. And it was higher. It was as high as 62.50. So this one, all in all, is not that bad. It seems like paying a nice dividend. Of course, it's down for the year. Like, what isn't, And it's dropped a bit. So yeah, this one I kind of like better than the DIVO. Now let's look at historical data here, which I didn't look at on DIVO. I may revert back to that briefly. So let's look at dividends only. Let's go back to, we'll just click the maximum here, apply. And so let's see, the dividends have hovered around 50 cents. Monthly, some months are different. Some months are 30 cents. Some months are 55 cents. Some are down to 25 cents. But that's still a nice monthly yield, but you're going to be paying a higher price than you would for the QYLD. That's still, of all of these covered call ETFs, that's still my favorite one. I know it's not performing well. Saying that may come back to bite me, but as of now, like I said, I showed my breakout of how I'm invested in the video that I did on my top 5 index fund ideas. So you can see, like, chart wise, I'm not like that big percentage wise into one fund. So I diversify pretty well, and I'm majority index investor, majority index investing in my 401k and real estate. That's probably accounts for like 70% of my allocation. So let's go back briefly to DIVO. just to look at the historical dividend yield. And okay, historical data. And I think all of these pay monthly. So if I filter again for dividends, can't get enough dividends, right? So going back, we've got 5 years of history here. This one has been fluctuating a bit. In its first year, it was paying in the 30-cent range. And then July 2018, 11 cents, 12 cents. So it got cut. That could be because it dropped. And then it paid $1 December 2019 for 1 month. That's pretty good for just 1 month. And then it's hovered around 14 or 15 cents all the way up to the most recent. Huh, that's interesting. We don't have April data. Wonder what happened there. Interesting. That's something that that's a little bit of a red flag. Why haven't they paid an April dividend? Let me see, January, February, March. Do they pay 12 months a year? January, February. Yeah, it looks like. So that's something to look out for. I'm not going to look into that right now. And then our third fund is XYLG. So let's check this one out. XYLG. That's the S&P 500 covered call and growth ETF. Now there's other variations of this. There's the XYLD, and there's another one that just popped up on my screen as I started to search and do a little bit of prep for this video. And we'll look into that one if we have time. This dividend yield, I don't like it. 0.91%. That's, but let's see. Inception, September 2020. So this isn't quite 2 years old. It had a nice straight line up in its first, probably up until, yeah, the end of 2021, like everything else. So it went from 26 all the way to 32, and then it's dropped. Year-to-date total return, it's down more than some of the others we just showed. So I'd have to say, just offhand, out of these three that we've looked at, I would rank this number 3 out of 3. DIVO, I would rank number 2, and then the JEPI, I would rank number 1. I actually would almost put that on par with QYLD. The only drawback is the price. The price is a little high because QYLD can be had for like 17 or 18 a share. So performance of this one was going up consistently, but it's been dropping. I don't like the dividend yield. Let's look at if it pays monthly. Let's see, dividends only. Oh, you know what? Does this pay a capital gain also? I think I discovered that with QYLD. Some funds, like you'll see this with mutual funds, they pay a capital gain distribution and a dividend. So it's like double dipping. Now you do get hit in your taxes by Uncle Sam for that. But, you know, it's passive income. It's income coming directly to you. So you're going to get hit. So, I mean, if you don't like paying taxes, don't make money. So you have like one of two choices, either make money or don't. If you defer it, you're not going to touch it. So you can only choke yourself off from income so much to defer it. Like what I recommend in the 401ks where you max out, you know, you can do that to lower your tax bill, but you're deferring that benefit until you retire. So you let that grow. So that's fine for that. But really, I don't think it's that big of a deal. You know, you're going to get taxed on dividend income if it's not in an IRA, and it is what it is. You just kind of have to suck it up. You're getting the benefit in the form of the dividend. So after that rant, let's look here. May 23rd. Oh, this is going to show daily. Let me filter this for monthly. Here we go. Okay, so this does pay a monthly dividend. I don't see any capital gain distribution, but I happen to see that pop up. Let's filter for that and just see, okay, there is none. So let me filter for dividends only. Not sure why Yahoo gives us these options when they're not there. Okay, so yeah, see 15 cents. So the dollar amount is on par with one of the last ones I showed, but percentage wise, it's not great. I like that percent and the JEPI a lot better. So those are the three, looking at those. And I know there are a lot of others. I'll look at the others in a future video or in several videos. I'll just keep churning these out because you guys seem to love these funds. So I have no problem if it gets me views. You know, I'm kind of shameless in that regard, but I'm providing a good benefit analyzing these. So, but I have no problem. I mean, if I'm going to get 500 to 1,000 views per video on this, I'll churn out a lot of them. And you know what? Let someone make fun of me for talking about dividends. I don't care. Like I say, unabashed dividends shill. That's what makes it fun. Makes it a fun, exciting game, this YouTubing. So as bonus, I want to look real quick. There's this QDIV that popped up on my screen as I was looking at the other ones, which is an S&P 500 quality dividend ETF. Let's look at that briefly as some bonus content, because I literally just discovered this when I started the video. So it's 3221, inception date 2018, dividends 2.76%, so better than that last one we just showed. And it's an S&P 500 quality dividend ETF. Not sure what makes it quality versus the other ones, but let's look at historical data and filter for dividends again. Come on. Historical data. The heck? Does that keep doing that? Historical data. Stick with me here. Screen's wanting to jump around. Okay, apply. Okay, so this is a monthly one also that hasn't fluctuated much. So that's that. That's just a bonus one. Now, as part 2 of the bonus content, let me real quick go into Excel and see how long it would take for this one to double just based on the dividends. So this is paying out, the JP Morgan Equity Premium Income ETF is paying out, let's see here. Yahoo's driving me nuts here. The screen's jumping around. Dividends only, monthly. Okay, let me try to cut and paste this into Excel. This is my last video here. I'll just start a new tab here. So I'll say growth of 10,000 or 10,000. Expand this here. Current price was, what was it, 56.93 equals 56.93. And of course, I've got a format. This is the boring part, but stick with me here because we'll spit out a decent result here in a minute. Okay, percentage was, I think it was 10 something, but let me just go back just to confirm. Come on. And this is up tomorrow and after hours, 6 cents. Okay, so 10.73%. Let's just do this. 10.03. And then I want this data here. 468, 588, 0.462. We're going to get a yearly, let's just do this here. This is quicker. 0.343, a trailing 1 year dividend yield. Okay, this should be 12 months. So that is $4.76. Let's just check here. Divided by 56.93. So that's 8%. So here's the thing. The dividend percentage is fluctuating because of the price of the underlying fund fluctuating. So let's do this. So if this is going to pay us, if you were to reinvest this, let's see. So start with, let's go to cell 4 to make it cleaner. So start with 10,000 equals 10,000 times, and then you add 1 to do the percentage growth. So 1.1073. So in this is year 2, year 3. Hold on, I'll just do this manually. Year 3, year, oh, sorry. Let me see if I can just, there we go. It knows what I'm doing now. Okay, so year 2, 3, 4, 5, 6, 7, 8, 9, one more. So you can see here the answer, the amount of time it would take to double. This is year 2, 3, 4, 5, 6, 7, in 8 years, you would double. And then obviously, if you can add another 0 to this, like if you're looking for retirement income here, then you double your money in 8 years with it. So this is totally possible with the percentage that it's paying. And since these are ETFs, you know, the index fund concept applies. Like I said in a prior video, this is like a nexus of index investing, options, and dividends. So it's like what my three favorite areas really. But how sustainable this percentage is remains to be seen. So, I mean, this looks attractive on paper, you know, doubling in 8 years certainly would give you decent retirement income, especially if you're looking to retire in 5 to 10 years. Depends on how much you need. I mean, 100,000, I think that's a lot of money, but the way inflation's going, you got to take into consideration, you know, that eats up 8% right now. I mean, they did say that in April we're down to like 4%, but you know, trailing 3 or 4 months, we're way higher than we historically are. So you got to keep in mind this 135,000 here, you know, times 0.92 minus the 8% inflation. It's going to eat away at purchasing power significantly. So you got to take that into consideration. So that's really all I wanted to cover. Hope you enjoyed that. Thanks for staying tuned all the way through, and have a great rest of your day. Please remember to like, comment, and subscribe, and stay tuned for my next dividend videos.